Ladies and gentlemen, dear viewers, I am Dimitris Koutsopoulos. I'm the CEO of Deloitte in Greece, and I'm very happy to be hosting this panel today for ESG, environment, social governance, and the sustainability of competitive advantage. In a rapidly evolving global economy with cross-border trade, with complex supply chains, with diverse workforces, it is evident that both businesses and business leaders face a number of environmental issues. From climate change to scarce resources, to social factors like increase of population growth, product safety, on the other hand, relationships with regulators and relationships with communities, and needless to mention, the impact of the unprecedented pandemic crisis that we are still facing today. In this context, ESG can directly impact the positioning, performance, and brand of the organizations, and managing those environmental and social factors can significantly affect the companies and actually create a competitive advantage, a sustainable competitive advantage. I'm delighted to have with me four distinguished professionals to discuss how incorporating ESG, as the abbreviation stands, framework or implementing an ESG strategy can assist organizations in the following day, but also assess how ready are the organizations to proceed with this transition. Now, in an alphabetical order, and I have next to me, I will start with Ms. Alexandra Konida. She's the Managing Director, Head of Wholesale Banking of HSBC in Greece. Together with us is also Mrs. Mary Nicholson, Managing Director, Head of Responsible Investment of Macquarie Infrastructure and Real Assets. Welcome. Mr. Keith Tuffley, Global Co-Head of the Sustainability and Corporate Transitions Group of Citi in the UK. And Mr. Thanos Vlachopoulos, General Manager, Corporate and Investment Banking of Piraeus Bank here in Greece. I would like first to give the floor to Mrs. Konida. Alexandra, how important is ESG framework? How important is to implement an ESG strategy? Can we please have your first thoughts on this?
Yeah, thank you, Dimitri, and I'm very happy to join the panel today. So it is, as you also said in your introductory remarks, it's beyond doubt that the pandemic has acted as an awakening call, and the transition to a low-carbon, sustainable future represents today one of the biggest opportunities that we have for the economy and the society. We have seen government fiscal stimulus linked to climate goals. The next EU Recovery Fund targets digital and green transition. We're seeing financial institutions aligning policies and financing decisions according to sustainability. And we're seeing companies increasingly embedding ESG targets into their strategies, as well as aligning their investment plans with sustainable goals. ESG is not a theoretical nice to have. It's a necessity, it's here, and it's a clear competitive advantage, I believe, for the companies that advance faster on this front. It is driven by consumer demand. It is driven by increased climate change awareness, especially amongst younger generations, I would say. Supply chain choices, regulation and policy making, availability of capital, and ultimately cost of capital. I would like to share with you some figures which come from our 2020 Global Sustainable Financing and Investment Survey that show the importance of ESG. So 97% of the companies that responded expect to redeploy capital in response to environmental and social challenges and opportunities over the next 5 years. 93% of the companies believe their capital providers, meaning shareholders, bondholders, bank lenders, care about their environmental and social performance. And 86% of the companies rate ESG and sustainability as very important or somewhat important, with the number one reason they state is that because they believe it's right to care about the world and the society, followed by our customers wants us to do this. Investors are also on board, with almost 50% viewing risk-return as the primary driver for environmental and social engagement. And banks, last but not least, can play a critical role. And at HSBC, we aim to lead this transition. First of all, in our own organization, we have a target to become net zero in operations and supply chain by 2030, and also align financed emissions, meaning the carbon emissions of the customers that we finance, to achieve net zero by 2050. And foremost, we are here, to support our clients in their transition to achieve net zero. And we are dedicating an amount of 750 billion to 1 trillion over the next 10 years to finance sustainable investments.
Thank you very, very much. Can I have some first thoughts from Ms. Nicholson?
So of course, thank you, Dimitris, and thank you, Alexandra, for your opening comments as well. I very much agree with the points that you have made. As an institution, Macquarie is very focused on sustainability. Our CEO, Shamara Wickramanayake, is a member both on the Global Commission for Adaptation and the Climate Finance Leadership Initiative, which sets a tone from the top that cascades through the organization. In Macquarie Infrastructure and Real Assets, we're investing in infrastructure, in real estate, in agriculture, in physical assets that are long-term in nature and fixed in place. And we're matching that long-term capital with long-term investors, predominantly pension funds and sovereign wealth funds. And so sustainability has been a very important focus for us for some time. As Alexandra just said, it's a necessity, not a nice to have. We believe that sustainability and a focus on ESG not only protects value, but it can generate and create. And we think that gives us the right positioning to deliver superior returns to investors. And sustainability is very important to our investors. We surveyed our key investors last year, and 91% of them said that they were focused on ESG and that focus was expected to increase over the coming years. And we see that anecdotally in the number of questions I get from investors about doing their due diligence on us as an asset manager, but also the demand we see from investors for sustainable products, say, for example, investments in renewable infrastructure. It's also, as has been mentioned, very much now a focus from the regulatory side as well. We see the EU Sustainable Finance Regulations, which came in this year, and more developments both within the European Union, but also globally, which require businesses like us to provide increased disclosure on how we're managing environmental, social, and governance risks to investors. One of the things that we have done over the last year, and this echoes the points that Alexandra has made, is to make, as Macquarie Asset Management, a commitment to invest and manage our portfolio in line with net zero by 2040. And then we strengthened or reaffirmed that commitment recently in March of this year by joining the Net Zero Asset Managers Initiative. So these are, I suppose, demonstrations of the importance that we place on climate as in civics, but also sustainability as a whole. Thank you.
Thank you. So can I have some first thoughts from Mr. Tuffley, please?
Yeah, sure. Thank you. And once again, thanks for welcoming me on. It's a delight to be part of this panel. Maybe just to highlight, I think, three mega trends that we are in the midst of now, to put this into context. So the first is obviously our net zero revolution that we're now facing, and it is becoming that because things are moving so quickly now. Since, for example, the Paris Agreement signed in December of 2015, I think my colleagues on the panel would agree that the first 2 or 3 years after the signing, in the financial markets were probably reasonably quiet relative to where they should have been. But the last 2 years, we've seen significant uptick in commitments from countries, from banks, from asset managers, asset owners, and across the full financing chain. The two previous speakers were highlighting the recent collaborations, such as the Net Zero Asset Owners Alliance, the Net Zero Asset Managers Alliance, and now we've just set up the Net Zero Banking Alliance. So there's now about $60 trillion under management or in financing. That's about a third of total financing. that is effectively committed to not just net zero by 2050, but also to set appropriate targets that are aligned with the Paris Agreement out to 2030. Now, this is yet to really accelerate. I think in the next, within the next 18 months, it's really going to step up. So we're going to see now such a significant change in which the financing sector is going to be putting pressure on the real economy to ensure that there is a full alignment of this decadal decarbonisation of the global economy. That's number one. We can't forget the nature and biodiversity crisis that we're also in. You know, since 1970, we've lost 70% of the mass of wildlife on the planet. We're facing extinction rates which are anything between 100 and 1,000 times faster than natural extinction rates. We are in a biodiversity crisis, and this is as big an issue as the climate crisis. What we have to do this year is to come up with the appropriate peak goals, similar to net zero by 2050, but now in nature and biodiversity. And then we have to accelerate and replicate what we've done in net zero with nature and biodiversity. And we have to then embed it into corporate strategy, into financing activities, etc. So that's the next big revolution that we'll be facing. And the third, of course, is the circular economy. We can't achieve these two other challenges, recognising we've got 7.6 billion people on the planet, we're going to about 10 billion people. We have to be far more efficient in the way that we produce, the way that we consume, and therefore ultimately we have to create a true circular economy in the system. Now what that means is that is probably another sort of 4 to 5 years behind the nature and biodiversity issues. So each of these challenges of climate, of nature and biodiversity, and of the circular economy will all be accelerating tremendously this decade, and the finance sector has a very significant role to play to be facilitators to positive change. But certainly, as the two previous speakers mentioned, this is a way to increase prosperity. It's a way to increase the sharing of the prosperity and to hopefully reduce inequalities in the world at the same time. Thank you.
Thank you. And can I also ask from Mr. Vlachopoulos to share some first views on ESG and being a sustainable competitive advantage?
Thank you for especially and Mr. Thomatos. You know, we are actually on the panel, the local representative. We had the honor to have Macquarie, HSBC, and Citi in the panel. And I would like to give you a flavor on what is happening actually in our country. And we are in the middle of a very challenging period. And after a very difficult year, 2020, I think that one of the key messages that have been emerged is actually that ESG is here to stay. We think that, as Alexander said, we see that sustainability is on the top of the agenda, is on the top of the agenda of the CEOs, not only on the banks, but also on the investors and the corporates. And now, more than ever, especially at this period, that many companies face a lot of challenges, it seems that there is one way that they can recover the crisis. There is one way that they can rebrand their business and they rebuild their model. And this is by adopting and embracing the sustainability principles. However, we see that there is a different pace between companies and how they are adopting the ESG principles. There's a different pace of maturity, not only between sectors, but also if you compare larger corporates with mid-corporates. We see that large corporates have an advantage. They are, let's say, in front of the rally. However, we see a shift from the mid-corporates from having an approach of just an option or just a luxury to go to an opportunity, to see the opportunity of the ESG framework. And actually what I think is that the role that the banks, and especially the Greek banks, have to play here is actually to take the responsibility and advise, guide, and pay, if you allow me, their clientele on this journey. And Piraeus Bank has a long history of the environmental and social responsibility. And I'm referring that the bank started to engage its operations on this framework since 2004. And I would like to share with the audience that the bank up to now has managed to starting from ourselves actually, have managed to reduce the CO2 emissions by 22% per employee. That's a huge amount if you compare it with the rest of the industry globally. Um, I think I would like to close the opening statement by saying that what we are trying to do as a bank is actually to be the sustainability disruptor on our industry and put all our resources and mobilize all our resources and capability to guide and, if you allow me, to advise our customers on this new journey, on the ESG journey. Thank you.
Thank you, Thano. So I'll get to a second set of questions. I will start again with Ms. Konida. How well are the companies prepared for the ESG transition to meet the investors' expectations?
Yes, so according again to our survey, we found that 86% of the firms globally, and actually 94% in Greece, they acknowledge that there are indeed multiple opportunities for their business from improving on the ESG front. So awareness is there, acknowledgement is there. This is a good starting point. And indeed, we also see an increasing number of companies, also in Greece, embedding ESG into their strategy. And we see them also starting announcing clear and measurable and tangible sustainability targets for the years to come. Of course, implementation and execution phase is critical. This is where capital is required. And this is where companies will need to meet with investors. So as Mary said, and it's important, investors and asset managers are increasingly using ESG criteria in their investment decisions. And this is because they see a strong correlation between the returns and the ability of the companies to generate sustainable, profitable growth. On the debt capital markets front as well, we are seeing a surge in sustainable financing instruments like Greek bonds and sustainability-linked bonds. So given this momentum and the appetite from investors, it is critical for the banks to support clients and to help them access these markets and have a clear, let's say, ESG strategy that they can attract investment from the markets. So for Greece, sustainability is high in the policy agenda. It's clear. Energy transition is one of the key pillars of the country's recovery plan. Greece actually stands out as one of the EU member states that has adopted ambitious, I would say, climate objectives. So there are significant investments in areas like renewables, circular economy, digitalization that are in the pipeline from the Greek corporates. And supporting these corporates in accessing capital to realize these investments is key for the way forward, I think. At HSBC, we clearly have this target. And I want to share with the audience two transactions that we were involved lately. There were two sustainable financing transactions for two large Greek corporates that are actually leading the way. The first one has been a sustainability-linked high-yield bond. This was the first ever high-yield bond of this type that was done in Europe. And it was a Greek company that actually did it. It was the incumbent power utility. They raised 775 million euros. And there was another transaction, a green bond, the inaugural green bond from a large industrial group, again, to use the proceeds for renewables investments. That also was very successful. So both these transactions, what we have seen is that the ESG element In the first one, it was the sustainability KPI. The other one was the proceeds to be used for green projects, were key in attracting really an unprecedented demand from international investors, which made the transactions, as I said, very successful and got the issuers a very attractive coupon and the funds needed to implement their plans. So the path is there, the investor appetite is there, and I think the financial institutions we have the responsibility to, as I said, to support our clients in getting the advantage and moving forward on their ESG strategy.
Thank you very, very much. I'll go next to Ms. Nicholson. Macquarie Asset Management made a net zero commitment back in December. Could you tell us more about how you are working with your assets to actually achieve this?
Yes, of course, and thank you. And to give some context, the kind of investments that we're making are private equity style investments where within our portfolios we have positions of significant influence or control over the businesses, and we affect influence through membership on the boards of these companies. So it's a very privileged position to be in, where rather than being restricted perhaps to asking questions and to voting in the case of a listed investment structure, we're actually able to really roll up our sleeves and help our portfolio companies to decarbonize, to improve their sustainability performance. And actually, we're focused on improvement of sustainability performance across the board in a wide range of factors. But specific to your question on net zero, we are working with our companies to, where not already done, to make sure that they understand their baseline emissions and then set targets for emissions reduction. Those targets to align, of course, with our objective of managing the portfolio to global net zero by 2040. And then we're working with them to do the most important thing, which is to identify initiatives, strategic initiatives that they can undertake to meet those targets. And in businesses like ours, these can range from very simple initiatives, switching light bulbs, switching where we source electricity to renewable sources, to things that require capex. So, for example, installing on-site solar onto roofs of buildings for our businesses, or electrifying fleets from diesel vehicles to vehicles, for example. But then some are going even further and looking at technology change that will be really important for the future. So as an example, Cadent, which is the largest gas distribution network in the UK, is exploring hydrogen technology. So as part of the UK's decarbonisation programme, Cadent is seeking to help establish the supply chain for hydrogen in the UK. But they're also trialling a blend of hydrogen and natural gas in a loop of the network, which of course reduces the emissions associated with any leakage associated with the gas, or obviously the burning of it in the hands of the consumer. So these sorts of technologies, I think, are going to be really important as we move towards a low carbon future, and it's great to be able to see some of those being explored in our assets. On the climate front, transition risk is dealt with perhaps easily by decarbonisation, but we are also looking at adaptation, so the physical risk of climate. And just as an example there, we have an investment in an electricity transmission business, a grid in the northern part of Europe, up in an area that's covered with permafrost. And as part of their adaptation to the impacts of climate change, which of course include warming, they are burying 26,000 kilometers of cable underground to stop them being affected by falling trees, because they're going through a forested area, and the trees are falling because we're seeing more extreme weather these days with including storms with the changing weather patterns, but also the permafrost itself is melting. So we are, which creates this sort of softness that means that these falls are more frequent. So in order to be able to continue to deliver uninterrupted service to the communities that it's reaching, which of course is the most important thing, we're working with them to bury them, which is really exciting. So it's both the adaptation and resilience side and the transition side that we're thinking about. Thank you.
Thank you. So a question to Mr. Tuffley now. How mature is the market to use sustainability as a competitive advantage?
Thanks. So, well, the simple answer is that it's here now. That it's quite clear that that ESG and sustainability is, if it's well executed, well thought through, is a competitive advantage. And I'll break this down into three areas or three types of examples. One is at the country level, two is with investors, and thirdly it's with companies. Now, at the country level, we've seen a significant shift in probably just in the last 6 months or so. You know, we had the Paris Agreement signed back in December 2015, but literally in the last 6 to 9 months, firstly with China committing to carbon neutrality by 2060, and probably even more importantly, to committing to peaking their emissions before 2030, which all indications are they're looking to well and truly beat that. And as the biggest emitter in the world at a country level, that's obviously very significant. Now, of course, equally so was the commitment made by President Biden just 2 weeks ago to decarbonise the American economy by 50 to 52% by 2030. Now, we've seen that matched by other countries. Japan, Korea increased their commitment. Obviously, the EU and the UK are leading overall. But what does this mean now is it's turning into a race to net zero. It's no longer a plod, it's actually a race, meaning that there's a race for investment, there's a race for technology, there's a race for innovation, there's a race for attracting talent. And what this is driving is just innovation across so many sectors of the economy. And of course, countries are now recognising increasingly that this is now the future of their economies. It's the future of, as President Biden says, good paying jobs. It's the future of innovation and technology. So this is turning into a competitive advantage for countries. That's now also occurring with investors. We're seeing this with quite clearly, for example, with returns of ESG funds versus traditional funds. We're seeing it with the cost of capital advantage of green bonds and sustainability linked bonds versus conventional bonds. We see in the order of 5 to 20 basis point cost of capital advantage being achieved. And so for investors, it's very, very clear now. And it's also stickier money, meaning that often the ESG investors are more willing to stay loyal to those funds versus conventional investors. At the company level, we're definitively seeing now evidence from a whole range of sources. Now, it's harder to assess this because the noise that goes into the data is quite makes it quite complex. But when you see the number of studies that show that high ESG performance is turning into better financial performance, it is giving the motivation for companies now to recognise, and for them, it's also a competitive advantage to be a good ESG performer and/or to be leveraged to the mega trends that I referred to earlier on. So we are now going to net zero. We've passed that tipping point. The world knows we're getting there, and we have to really accelerate this for this decade. But increasingly, companies, investors, and countries are recognising that this is now turning into a competitive advantage. Now, on the flip side, if you're left behind, it'll be very hard to catch up. So for those that don't recognise these revolutions that are occurring and not investing in the future and not investing in their people and these innovations, they'll be left behind forever. And we're going to see a lot of disrupted sectors and companies this decade. Thank you.
Thank you. Thank you very much. And a question addressed to Mr. Vlachopoulos, going a little bit, drilling down to the Greek environment. The Greek government is playing significant focus on the transition of the Greek economy to a greener economic model. In the meantime, we all notice an ever-increasing focus of the international investor community around ESG matters, as it was just disclosed also by Mr. Tuffley. How well equipped are Greek banks to embed ESG criteria that are sought after by investors, but are also needed to accelerate the broader transition of Greece?
Thank you, Dimitri. Thank you for the question. I would like to start by saying that as a country, we have a historic opportunity to rebuild our economic model. And taking into account the unprecedented magnitude of the Recovery and Resilience Fund, this is the opportunity that we have to rebuild or to have a reconstruction of how the country operates. And indeed, as you mentioned, there is an increased focus on the green transition. However, I would like to ask ourselves, is it enough just financing green, clean energy projects that will lead to this rebuilding of our economic model? I think that it's not. The answer is no. And I think that's why the European Union mechanism have taken into account that the recovery fund will facilitate investments that will have a positive impact on job creation and employment, on social and economic resilience, and definitely on the digital and extroversion of the Greek economy. So, actually, coming to your question, the simple answer is yes. Greek banks are ready, I think, to adopt and work with the ESG principles. And let me take this opportunity to make a reference to Piraeus Bank and to what we are actually doing on this front. And as I told you earlier, actually we see the sustainability not just as an, let's say, an option, but we see it as an imperative and as an opportunity. Um, we started, as said earlier, we started back in 2004, and today the bank is the top financier in the renewable energy sources project, having financed about 28% of the installed capacity in the country. I would like also to mention that since 2017, within our loan evaluation process, we have baked in environmental and social criteria. In 2020, the bank was the first bank that covered the first sustainability-linked commercial loan, meaning not a listed asset. And we have also two new issues on the first quarter of the 2021. And let me remind the audience that the bank was the lead advisor on the first Greek issue of the listed bond of an energy company, 150 euros last year. So I think yes, the answer is yes, the Greek banks are ready, and I think we have the opportunity, but also the responsibility when we are financing and investing, when we're financing a project, not only to measure the positive impact on the cash flow of the companies, but also the positive impact on the society and the general economy. And I think that, let me close by saying that I think that this is actually the only way forward, because if we don't spread the positive impact of the wealth that is produced by the companies, this is something that we are going to find it over the next years in front of us. Thank you.
Thank you very much, Nana. Thank you. Just 3 words just to close our session. And from what it has been discussed, ESG is here to stay. It's a necessity. It's a must-have. It is a fact that many companies, many CEOs have already embraced ESG. It has now have to be part of the strategy, has to be part of the plans of the companies. Some of them have started implementation. Implementation will be a very, very significant part. And I would like once more to raise the importance of ESG and the fact that it will create a sustainable competitive advantage. Otherwise, competition will outpace you and you will be left behind. I would like to thank all our speakers today for participating in the panel, and I would like to thank you all for viewing this very interesting discussion. Thank you.
Thank you.
Thank you.